Uh, good afternoon, everybody. Ladies and gentlemen, good evening and a warm welcome to all of you. The success of a developing economy like India critically depends on the capacity of our society to root out the evil of corruption and black money from its very foundations. Amidst the growing number of financial crimes and high-profile cases, it is not a newfangled fact that money laundering poses a serious threat to the financial systems of any country, and is of the essence to make the existing provisions stricter and better armored to detect suspicious transactions. The present Indian government has rigorously been enforcing measures to curb the generation of black money and to bring back the suppressed money along with its benefits, which is circulating in the economy under the tax regime. With this motive, the government introduced the Black Money, Undisclosed Foreign Income and Assets and Imposition of Tax Act 2015, substantially amended the Prohibition of Benami Property Transactions Act 1988, and has vigorously applied such acts. Also, the government in the Finance Act 2020 has made several amendments to tighten the gaps around the existing provisions of the Prevention of Money Laundering Act 2002 PMLA and to curb the prevailing ambiguity and confusion. Income Tax Act and other laws relating to economic offences have large-scale overlap amongst them and possess interplay. Also, the enforcement of the Black Money Act and the judiciary process under the same has been operating through the income tax authorities, and there have been some litigations revolving around the black money and imposition of Tax Act 2015, which has traversed to Income Tax Appellate Tribunal as well. This seminar has been organized jointly by IMC Direct Taxation Committee with Bombay Chartered Accountants Society and Chamber of Tax Consultants to understand this multifaceted and intertwined application amongst the above mentioned laws. We have organized a webinar which will give more clarity on the issues arising on account of interpretations and application of the multiple laws. I welcome our speakers and the panelists for today's webinar, Shri Ashwani Taneja, Advocate CA and ex-tribunal member, Shri Rabi Narayan Dash, ex-CCIT and ex-chairman tribunal of PMLA and Benami law, and Shri Amit Khemka, Advocate Supreme Court of India. I would like to thank all the speakers for consenting to be part of this event. A small word about IMC, established in 1907 and having its headquarters in the heart of the city of Mumbai. The IMC Chamber of Commerce and Industry is an apex chamber of commerce, trade and industry in the Western region, with its membership base of over 5,000 members and over 150 trade associations affiliated to it. Together, it represents and advocates interests of over 4 lakh business and industry establishments across the country from diverse sectors of the industry. It has 27 industry-specific committees of experts through which it provides policy inputs and recommendations at various levels of government and organizes activities where eminent business and government leaders engage with its members on a wide range of issues to create environment for sustainable economic development. The IMC International ADR Center offers institutional arbitration of disputes in international standard facilities and establishes rules and panel of arbitrators. Our state-of-the-art venues available for hire are catering to various sizes and equipped with Wi-Fi and video conference facilities and have been made COVID protocol compliant. We are authorized by the Government of India to provide issuance of certificate of origin of exporters of this service, have also made available online with digital stamping and signing features. The theme for this year for IMC has been Engaging Maharashtra, Building India. Once again, I welcome you all to this interesting event. I'm sure you would go back enriched. With these words, I welcome you all once again to the event and thank you very much and best wishes. Over to you, Rajan Bhai.
Thank you, Sudhir Bhai. Before I start, may I wish everybody Makar Sankranti, Pongal, and Lohri to all of you from all over India, because we have pan-India participation, panelists as well as the speakers. So therefore, and we feel that it is good to multiple festivals but different names. Same festival but different names. So therefore, that is important for us. We also hope and pray that all of you are keeping good health and not affected by the present spread of the third wave of epidemic corona. And if you have, we hope that you will recover very well and come back to the normal very soon. Friends, thank you, Juzar for giving a welcome to everybody. And I also welcome all the associations who are joined together for this program. That is the Bombay Chartered Society, Chamber of Tax Consultants, and Indian Merchant Chamber. So I welcome Abhay, President of the BCA, Deepak, Anil, Mayurbhai, then Ketan, Anish, and Ashok Mehta, and none other than Rutvik, who is the Chief Coordinator for the entire program, along with Upendra Bhai and Lucy from the IMC. Friends, it is a great pleasure to welcome all of you for this important webinar on very topical, interesting and topical subject due to the several actions being taken by the government and under BMA, Anti-Money Laundering and Benami Properties Act. This has become a topic of the day, topic of the discussion for the professionals as well as the industry houses. Later, when I can say that these laws are more in the news than really in the action, because ultimately what happens, nobody knows, and therefore, but it comes more in the newspaper than in the on the legal documents. Friends, the discussion on this topic became more important because all of us are more familiar with the income tax law, and we are more familiar with what is undisclosed income, what is undisclosed assets, and all those laws. But when we try to interpret those other laws, new laws, which are BMA or PLMA or Benami properties, and try to use the definitions of undisclosed or undisclosed assets or income from Income Tax Act, it does not solve the problem, and on the contrary, it complicates the problem. So therefore, we always wonder, why was this laws required? Was it really required, or proper implementation of income tax law with simple amendment to the income tax law was sufficient? Or it is a multiplicity of laws is only complicated the situation, or what is it is happening? So to understand all this, I think this is a challenging. We had a challenging task, and therefore we thought of arranging this webinar. And fortunately for us, we have an expert panelist, expert speakers who have agreed to share their rich knowledge and experience in this field. Starting with Dr. R.N. Das, whom I knew for last 25 years, very thorough person, though from the IRS wing, but the way he has transformed himself as a professional, you'll find during his answers, the way we get. Ashwani Taneja ji, who is again CA and former member of tribunal, which I know him for last 15 to 20 years, again, very thorough professional and now specializes in these laws. And very senior advocate, that is Amit Khemka ji from Supreme Court. Again, who is specialized in this, supported with the moderators, Ruchi Sehgal and Govind. So these are two moderators who will be there. Friends, this entire program is devised not on the basis of any presentation, but in the form of discussion oriented, so as to make that more informative and more directly to the point, so as to reach to the exactly issues which are faced by the people, by the professionals. And that is what we, in the form of question answer, this will be discussed, but bringing out all the silent features of all the things. So with this brief welcome note to all of you, may I now request Mayur Nayak, past president of the BCA and present chairman of the International Tax Committee of BCA, to introduce the faculty members and speakers and take it forward. Over to you, Mayur.
Thank you, Rajan Bhai. Dignitaries on the screen, before the screen and behind the screen. I join Rajan Bhai in welcoming you all and wishing you a very happy Makar Sankranti and Loni and Pongal. I have a pleasant task of introducing our esteemed panelists and the moderators. To start with Dr. R.N. Das, a former IRS officer who was former acting chairman and member of the Appellate Tribunal under the Prevention of Money Laundering Act, is currently a practicing advocate at Delhi. He was a former DG of International Taxation and has wide experience in policy making in government, where he worked nearly 42 years. an extremely humble person and very knowledgeable, ever ready to share his knowledge with the professionals. We welcome Dr. Das. Next, Mr. Khemka. Mr. Amit Khemka ji is a litigation lawyer with experience of almost 37 years at the bar. He has handled large number of cases involving complex issues in the domains of criminal, civil, and constitutional laws. When district Gautam Buddha Nagar was abolished, he was the lawyer who fought in High Court and Supreme Court to get the district status restored to Gautam Buddha Nagar. The cases handled by him have made significant impact legally as well as socially. He has a large client list including corporates, professionals, public servants, and politicians. For his legal acumen, he is regularly invited to All India Radio and various TV channels and has participated in about 400 debates on All India Radio and about 1,000 debates on TV on diverse legal subjects. He has addressed the Standing Committee of Parliament and regularly delivers lectures at different forums, including chartered accountants, lawyers, and students. He has held various posts in a number of NGOs and lawyers associations. He has been bestowed with various awards and recognitions by a number of organizations for his legal acumen and services to the masses. Friends, please welcome the illustrious personality, Shri Amit Khemka ji. I have a pleasure of introducing our old professional brother, C.A. Ashwani ji Taneja ji. He is a former member of the Income Tax Appellate Tribunal. He has done Masters in Law LLM. He is a fellow member of Indian Council of Arbitration, the Institute of Chartered Accountants of India, the Institute of Company Secretaries of India, and the Institute of Cost and Works Accountants of India. He practiced as a chartered accountant from 1995 to 2007 and handled varied areas of practice such as auditing, due diligence, tax planning, litigation, business advisory, and restructuring. Between 2007 and 2015, he practiced as a lawyer with the firm Messrs. RRA Tax India, Tax Advisors and Advocates, New Delhi, and appeared before ITAT, High Court, and Supreme Court. In 2015, he was elevated as a member of the Income Tax Appellate Tribunal and was posted at Mumbai bench, where he delivered more than 2,000 judgments covering wide variety of issues. Then in 2017, he resigned as a member of the ITAT and joined back his old charm and passion, legal profession. Currently, he is practicing again as a lawyer with Messrs. RRA Legal, Delhi, specializing in the area of anti-money laundering law, Benami law, Black Money Act, SFIO, and income tax, making representations before adjudicating authority and the appellate tribunal of Benami law, PMLA, ITAT, High Courts, and the Honorable Supreme Court of India. He is a prolific speaker and has delivered presentations and lectures on different forums across the country regarding various issues of PMLA, Benami law, and income tax law. He has given interviews, published articles, and papers on complex issues arising on these subjects on various TV channels and newspapers. He has to his credit good number of landmark cases argued by him before different courts and authored by him at the tribunal, which have been published in the leading tax journals of the country. Friend is always available to share his vast knowledge on issues arising on these subjects with the professionals and public at large. Friends, please welcome the towering personality, Shri Ashwani ji Taneja. We have two moderators, Rishi Sehgal. He is an advocate on record, Supreme Court of India. He has experience of more than 10 years as a practicing advocate. He regularly appears before the tribunal, trial courts, High Court, Supreme Court of India, and various tribunals. Friends, please welcome the moderator, Rishi Sehgal. We have another moderator, Advocate V. Govinda Ramanan. A special thanks to him. In spite of being COVID positive, he is here today to moderate this discussion. Mr. V. Govinda Raman is an advocate practicing in the field of economic law litigation. He regularly appears before the Honorable High Courts and Supreme Court, and also before various authorities such as Adjudicating Authority, Appellate Tribunal for Forfeited Property, National Company Law Tribunal. He has an experience of more than half a decade. Friends, please welcome Advocate Govind Ramana. With this, I hand over the proceedings to Shri Ashwani ji. Over to you, sir.
Thank you, Mayur Bhai, for the kind words you have spoken. For all of us, on behalf of everyone, I convey my sincere thanks and gratitude to all the participants who have spared their valuable time in joining the session here today, and to allow us and encourage us to make our thoughts, share our thoughts, especially in this depressing times when everybody is struggling, to keep himself safe and healthy. Now, before I come back to the topic, I would place my special thanks to all the three organizations, IMC, BCA and CTC. I am regularly associated with CTC and BCA in past, since when I joined as tribunal member in Bombay, and even after that, the kind of love and affection and all of you have given, it was always touching my heart, always. I never felt that I am out of my home, even when I was in Mumbai. I cannot take all the names, but I cannot confine myself, restrain myself in conveying special thanks to the organizers, including Rajan Bhai, especially our beloved Rajan Bhai, who has always been encouraging me to do whatever little I am able to do today. And Jujar Bhai, Abhay Mehta ji, Ketan Bhai, and dear Rutvik, and forgive me if I'm not able to take all the names, all the organizers who have made this session. And I am sure with the involvement of all of you and our enlightened participants who are very keen, this session is going to be very, very interesting session. As Rajan Bhai was mentioning, that it is everyday's pastry, which whenever we see newspaper. In fact, when I was in tribunal, even then I started noting that after the coming into power of the present dispensation, there is a shift in the mindset, in the thought, in the approach, which was needed. That our economy was getting derailed because of various leakages, because of various, I would say, non-compliances, and the attitude not to respect the nation kind of thing, various things we were facing. And that is why, our parallel economy had become larger than our main economy. So the government has rightfully taken the steps to streamline the things, to streamline the economy, to prevent the leakages, to plug the loopholes, and also keeping in view the international requirements, which is time to time renewed and reinforced by the United Nations member countries and from various other corners. DASA would be able to develop on more in detail. But when I resigned, I found that though the economy is being realigned, though there is fresh enforcement of these laws, which was dire need of the country, but I also noticed that there has come a void between the demand and supply, a void between the requirement of the able guidance of the people, of the professionals, to the society, to the businessmen, and to the nation, and to the executives who are implementing the laws on behalf of the nation. So there was a void on all areas. Because the laws were very freshly introduced laws or freshly reinforced laws, but there was not ample mechanism and infrastructure and intelligence available to handle them in a proper manner on both the sides. So keeping in view, we took this initiative that, that is the role of the professionals also, in fact, but the expectations which that society and the nation has from the professionals, that it could fill up that requisite deficit of intelligence and inputs and requisite advisory and guidance. So the problems which I faced, 2-3 problems I faced, I witnessed, and today also I am witnessing, that though laws are needed, but what I notice is that vague drafting of law, because laws were drafted for whatever reasons in a hurried manner. Most of the cases, they were not presented to the requisite agencies, be it law commission or other select committees or any other commissions whosoever could have done requisite research. I mean, sometimes it appears as if the laws were drafted overnight. Of course, there were some reasons for it. So because of that, drafting has not been robust enough, adequate, clear. So there has been vagueness there. I mean, it is wanting. The drafting is wanting. If you read at many places, you'll find that no, there's something more should have been there to make it clear. Second, when the enforcement agencies have been strengthened, simultaneously, probably it has been skipped from the attention of our top brass that remedial agencies or remedial mechanism has to be simultaneously in sync with the enforcement agencies, has to be strengthened so that the real purpose is achieved. And denting is not more than the prevention of denting. So loss is not more than the benefit which we are expecting, which is possible only when remedial mechanism is also equally appropriately placed, which I find is missing, which it is not only I am saying. Honorable Delhi High Court has said a number of times through his judgments. Few other high courts have stated, and which is evident from the fact that the appellate tribunal of PMLA, Benami law and forfeited properties, and FEMA and SAFEMA and NDPS, that is lying vacant. It is manless since last more than 2 years. So huge cases are being piled up. So attachments are being done, coercive measures are being taken under these laws, but there is no judicial body to take care of the aspect whether the actions are fair, are legal or not. Then resultantly, what has happened is that there have been some at times unthoughtful actions, some biased actions, some I will say targeted actions on the part of the enforcement agencies, which is making these laws very, very burdensome. I would say, I mean, it has become difficult. It has become difficult to bear the harshness or gravity of these laws at times. So I sometimes find that it has the enforcement has gone far beyond, and it has been astray. I mean, it has been delinked from the main objects for which these laws have been enacted. You take Benami law, for the purpose for which the Benami law was introduced. I mean, around 3 years back, my interview was published when Shah Rukh Khan's this property, Alibag property, was attached. At that time, these words were reproduced in the newspaper, where I said that this is an unguided missile, unwittingly created, loaded with nuclear arsenal. I mean, around in 2017, you can pick up the newspaper and find that these were the things which came to my mind and expressed. And I thought later on that whether I have said something more, but I when read the law again, I said, no, I mean, it is prone to misuse because there are no fetters under the law. There are no checks and balances under the law. This is the only piece of legislation in the country which is limitless. Limitless means there are no boundaries. As I quite often say, that things have been picked up from Srimad Bhagavad Gita, that time samay anant hai. It is, timeless beauty. There is no fetters on the past. I mean, past, they can dig up any transaction for as many years as possible. And more surprisingly, there is no future time limit also, that if a person does transaction today, up to how many years he can, the enforcement agencies can pick up the transaction for scrutiny or actions. I mean, the answer is no limit. I mean, I cannot imagine as a student of law that there can be any piece of legislation which has no time limit boundaries, particularly laws dealing with economic offenses. It is not a law dealing with any heinous crime. So any such legislation which has no boundary of time. So checks and balances are virtually gone missing. And on the top of it, remedial mechanism is also missing. So I really, through these 3 forums, I want to make humble request to the government to kindly look into these areas so that the real purpose is achieved. Only wrongdoers are booked, not that innocent is also crushed. The business sentiment should not be depressed. So, I mean, these are few of the thoughts which came to my mind, which I thought before beginning the session. So therefore, now I come back to the thing for which we have gathered. So all those things compelled us to think that at least we professionals should strengthen our own intelligence and wisdom so that we are able to serve the society, at least to this extent, that we are able to create awareness about these laws. Today, any one transaction need not be looked through only one prism of one law only. One transaction has to be looked through all possible legislation which could be made applicable. Suppose I want to buy a property. If I buy the property at appropriate value, pay stamp duty, it's not enough. I have to see from whom I am buying. whether he has bought the property bona fide or the property is kind of proceeds of crime in his hands. So I have to verify his sources also. I mean, this is not a problem of a common citizen. Certain bureaucrats, senior bureaucrats are also facing the action on the ground that the property which has been purchased by them is either Benami or it was a pursuit of crime in the hands of the seller. So this property is liable for attachment. Those senior government officers are in jittery that Mr. Taneja, we have purchased this property from our past savings accumulated from our salary income. So, I mean, I have to vet the property from the angle of Benami also today. So there are various things for which we thought that let the awareness be spread so that we can guide every businessman, every citizen of the society that today it has become imperative for us to make compliance of the law, because the cost of non-compliance has become far, far higher than the cost of compliance. Unlike the past days when maybe cost of compliance was much higher, cost of non-compliance was lower. Today it has gone reverse. So therefore, keeping in view this, I think this program has been very well organized today. And let us make our humble effort to create whatever little awareness we are able to create today. Thank you very much. Over to you, Mayur Bhai. Or as you say, we can take up the moderators. We can request
moderators can start. Ashwani,
Yes.
moderators can start.
Moderators can start.
So Rishi or Govindji, whatever questions. Yes, one thing more I wanted to say, that on the basis of our past experiences, various queries are coming into the mind of many people, many professionals, many businessmen, very other citizens, maybe government officers, maybe non-government officers. So various queries which are coming to their mind or the issues which they are facing. We have compiled some queries. Our moderators have taken a lot of pain, and all the organizers of these three organizations have taken a lot of pain in compiling those queries. So those are the queries keeping in view the, first of all, the fundamental aspects, the basic issues which everybody is facing. So I hope most of the issues which are being faced will be, with respect to these three laws, will be covered. And thereafter, still whatever is left, I think Mayur Bhai has organized a open house session also. Whatever queries you will be raising, it will come to us. And whatever queries we are able to address today, we will definitely be addressing today only. Otherwise, whatever will be left, I will be most pleased to answer them also. Thank you very much.
Dr. Dashu would like to say 2 minutes, some preliminary remark. Amit and Darji.
And if we are not able to answer something, then we will fall back to Rajan Bhai.
Dr. Dashu would like to say 2 minutes something. Both of you, Amit, or we want to start straight?
Let us carry on with the planned program.
Okay, fine.
During the course of that, we'll certainly exchange a few words.
Sure. Shiji, you can start.
Yes, sir. Yeah. First of all, I would like to thank everyone for giving me this opportunity to be a part of this great and helping program. And I would also like to thank the organizers and the committee members of the three of the most premier organizations in tax. So let's straight away go to the questions. And before we get into the nuances of these three laws, let me first put to Das sir. Sir, we have seen a sudden spate of very strict laws dealing with economic issues such as PMLA and Black Money Act in last 2 decades, which have had a great impact on the way which we perceive these economic laws, sir. Since you have been one of the persons who was in the middle of when these laws were being legislated, I would request you, from your experience being part of the legislation, to please enlighten us on this aspect, sir, the background and the necessities to bring in these acts. Over to you, Das.
Thank you, Rishiji. And dear friends, good afternoon to all. See, all of us are dwelling upon a few laws, certain new generation laws, I call those, that have come up as special laws. Organizations like ED doubt it is a complete code. That is all bunkum. It is not complete code. They dwell well on CRPC and everything. But they have special laws. Why? There was a need for that. Essentially, these laws are for financial crime prevention and also to ensure that criminal justice in those crimes. Why? Because certain new things emerged, both worldwide and within India. Activities such as drug trafficking, terror financing, unbridled corruption and misappropriation of funds, both government, corporate, and other sectors, bank frauds in the wake of liberalization, because I joined during those transition period when Dr. Manmohan Singh was a finance minister. I joined finance ministry as the director of tax policy. So I have seen it from the ringside. So then human trafficking, which is worldwide, exploitation of natural resources, like we witnessed in this mining scandals, coal scandals and everything, money laundering, when all these things generated monies, those have to be laundered. They go well beyond what you call the financial loss that country suffers, any country, not only India, it is worldwide. And well, even beyond the economic well-being of the state, it affects people's concept of a fair play and a just society. People become resentful. All of us witnessed that some years back when it was played up during a parliamentary election to the hilt. And why special laws were required for these activities? That the people who are behind financial crimes are usually very smart people, technologically sophisticated. They are moneyed people, well-heeled people. They make use of their financial resources to build networks, very extensive networks, including with law enforcement, politicians, society, everywhere. So this is not only in India. This is a global situation in which it was felt that certain special laws, existing laws are not adequate. Special laws are required to address the efficacy of a justice delivery system in case of each of these economic offenses. In India, what happened? We unleashed, after economic liberalization, after repeal of FERA and introduction of a milder FEMA in 99, that the spate of illicit transfer of funds from India to countries abroad have accelerated, multiplied, and it was of grave concern. Thus, these two things, external forces, internal forces, they required certain these special laws, and these special laws we are dealing with are basically PMLA, Black Money, Benami Transactions Prohibition Act, Fugitive Economic Offenders Act, like. You see, PMLA is because of our commitment to UNO, an external requirement. Even I have noticed that it hibernated for quite a few years. There was a resistance even within the country to implement money laundering laws for quite some time. And it took a little over, though it started from 1996, it became effective in 2005. So, but it is because of our commitment to United Nations, because of the pressure from FATF Group G7, that this law came into being. But the law that came in 2002, that PMLA 2002, effective from 2005, is not what we are witnessing law today. After amendment, it has become, its reincarnation has become what many people tell it is draconian. So then the other law is Black Money Act. Black Money Act was introduced as not government's initial initiative. It is a reaction to what? The civil society's needs for a Black Money Act. They became agitated about money stashed abroad. And also apex courts, mandamus, in the case of Ram Jethmalani case, when SIT was formed and everything. So, at the political powers that emerged then, they used that opportunity to bring in this provision. This provision, like PMLA, while PMLA was external driven, this was internal driven. Benami is another thing that was hibernating for a long time, unimplemented. Suddenly, it was felt because of Indian internal needs to resurrect it with number of amendments, huge number of amendments, and it has become also another new generation law.
Ashwani ji, I think there is some connectivity issue with
Yes.
Saab. Somebody can take it over.
Yes. Rishi, please.
Yes.
So this basically, because of all these regions, a number of laws came into existence. So it was not a single region, but it was a number of regions that this thing. But because of the way the laws, Ashwani ji dwelt upon one aspect, that was a hastily written law. No, certain laws were hastily done, but it was purposefully done. Certain element of a mischief were purposefully done. I'll dwell upon that while we are discussing, because even at the time of amending the definition for money laundering, the idea that was the object that was said that it is because of FATF recommendation. But FATF recommendation wanted it like it is in Article 6 of a Palermo Declaration, where it is seen that knowingly that the person would have committed all these acts knowingly, and that aspect from Palermo Convention was omitted. Why? They knew very well. The people who amended the law, they knew very well that was there. But by eliminating that, they made sure that the investigators, the regulators will have an easy time in catching people without that. So in the process, I would call it a mischief. I'll call it not only an administrative mischief, it is probably a legislative mischief. So the thing is that it has not been taken up by the judiciary. It has not been taken up by the lawyers. And as and when it will evolve, those aspects will take. Similarly, there are other aspects, both in Black Money Act and Money Laundering Act, where certain amount of arbitrariness was was introduced, I suspect, purposefully. But as citizens, all of us must support the war against financial crimes and strengthen it. It is for the good of the society. And as professionals, we must fight, we must resist the misuse either for political reasons or otherwise. And we should all ensure, agitate, and try to find out so that adequate safeguards against arbitrariness and misuse are included in these laws. This will come only when the people will, citizens will represent, citizens will fight for it. There will be judicial concern about it. Then only it will happen. So thank you very much. I dwelt in general about these laws without going specific into it. And I request the moderator to please carry on.
Thank you so much, Dash sir, for sharing your valuable insight on the history and background of the economic laws that were brought about in our country. My next question is to Ashwani sir. Sir, though we are very well aware that in the year 1988, the Benami law was enacted by the Parliament for the very first time. And thereafter, in the year 2016, an amendment was brought in to the old act, which came into effect on 1st of November 2016. My question to you is, sir, what was the need to have brought in such drastic amendments when already an act was there in existence, more so from the year 1988 itself? Over to you, Ashwani sir.
Yes, it is everybody's now question. First of all, what for the law was introduced in 1988? If it was introduced in 1988, why it was not enforced? And if it was not enforced in the wisdom, then what was the need to now amend it 2016? All three questions are very interesting. Now, as far as 1988 law was introduced, I would say it was belated introduction of the law. I mean, it should have been introduced much earlier, because the Law Commission has given its report in 1974 itself that there is a serious dent to the economy because of the Benami transactions. Though Benami transactions were happening since centuries, Indian Trust Act 1882, Section 81, 82, and 94 of Indian Trust Act had allowed Benami transaction to take place. Section 281A of Income Tax Act itself had allowed Benami transactions, endorsed the Benami transactions. So at the time of British rule as well as post-independence income tax also, Benami transactions were allowed. But Law Commission was of opinion that no, this is creating a problem. Standing Committee on the Finance, also the Parliament also gave an opinion that this is creating problems, something must be done. But despite that, for whatever reasons, till 14 years, nothing was done. And suddenly in 1988, law is introduced. May 1988 by way of ordinance, which becomes act in September 88. Now, though it became an act, enforceable piece of legislation, but it remained inactive, unenforceable, because no enforcement agencies were created. They had only very crisp law they had made out. It contained only 9 sections, and section 2 very specifically said that no person will be doing Benami transaction in the country. But the definition of Benami transaction was not complete enough, which will be evident from the fact that when we compare it with the present definition of the Benami transaction, that is one part only. The other major part is that there was no enforcement agencies created to implement this law. So the law remained as a paper tiger only. And the life in this paper tiger was infused when everybody came out of his home, and I mean, this paper tiger was put on the doorstep of everybody, and the life was infused in 2016. Before, I do not know how many of you would be aware, before introduction of this law in 2016, this legislation was also given to the Standing Committee of the Parliament for its dissection and analysis and report. And under the chairmanship of Mr. Virappa Moily, the earlier law minister, this report, 200 pages report was prepared, wherein it was said that inter alia, it was opined that this law needs drastic amendments. Otherwise, if it is introduced in present form, then it will create chaos at more than 50% of rural India, and 60% of urban India will become Benami. That is what was the opinion, written opinion. This report is available on the public domain also. So despite that, our present dispensation thought it appropriate for the need of the country to bring out the law in more or less in the same form as the earlier bill was there. So since the law was not enforceable, that is why to make it enforceable, the drastic amendments were made, but the amendments were so large that it contained around 74 sections as against 9 sections. So somebody also gave this opinion and raised this question also at the floor of the House by the then Finance Minister, late Shri Arun Jaitley, that what was the need to insert the large ship into small boat? You could have repealed the earlier law. He was quite witty and he said, yes, we are aware of this. The reasoning seems to be sound, but we have our own reason. The reason is that we did not want to give immunity to the people who have done Benami transaction in last 28 years. 28 means 2016 minus 1988. So in a way, Mr. Jaitley was of the opinion that this law will be enforced retrospectively. So this present law has created the enforcement agency and has been made a self-contained piece of legislation in itself, and that is why there was a need to bring out the amendment so that this law could be enforced. And as Dasser has also explained, and Khemka ji will also explain in course of the session, that there are many reasons why there is a need of the law prohibiting Benami transactions. That is other thing, that whether this law will be able to fulfill that need or it will overreach or overkill, that is a matter of debate analysis which we'll have, and also the time will witness that. Thank you, Govind.
Thank you, sir. Thank you for giving a description of why the Benami law was changed and why in 2016 a drastic amendment came in, sir. So now let me come back to Money Laundering Act and ask you that it is a little difficult to understand money laundering, what exactly money laundering is. So in the context of laws in India, could you please simplify the definition of money laundering so that everybody in the audience can understand it, and also the most important issue and the aspect of it, that is proceeds of crime. What is proceeds of crime? Thank you, sir.
Very pertinent question, which is arising in everybody's mind today. Anyone who reads the newspaper and in the morning, and he will find, okay, this person has been roped into the action by enforcement directorate on the charge of money laundering. So everybody thinks whether he or she has also committed knowingly or unknowingly some money laundering. So what is this exactly is money laundering? But before that, I will like to draw your attention on one particular fact, which I found quite, quite strange and worth mentioning, that during this Corona period, entire lockdown, one department which was working constantly, uninterrupted, other than the groceries, the eateries, the medical and the security department. Other than these 3-4 departments, even railways were shut, aviation was shut, transport was shut. So any one department which was working uninterrupted, you know what was that department? The name of the department is Enforcement Directorate. So I do not know what was the so dire need that not even one day, this whatever came, I mean, there must be some imperative need, we understand. So this money laundering, what is that money laundering? Somebody would say, sir, converting black into white would be money laundering. Whether it will be money laundering? No. Converting of black into white will be tax evasion, of course. But whether the tax evasion itself will be money laundering, can they be interchanged? No, because money laundering is something more than that. And if we want to understand it in terms of colors, I would say money laundering is something which is like converting red into white. So the red would denote symbolically here blood, in turn crime. So something related to crime is there involved here. So whenever tainted money is portrayed as untainted money, it is money laundering, washing the color of the money. Money does not have its own color. Of course, it depends upon the intention of the person who is possessing and the user who is using it, for money or property, whatever it is. So if anything which is related to crime, meaning thereby, if we go little more deep into it, suppose a person has done some crime and that crime is a scheduled offense. What is scheduled offense, which we will understand little later. So if that offense is also a scheduled offense, and from doing that scheduled offense, if some earning is done, some proceeds are derived therefrom, and those proceeds are portrayed in whatever manner as has been prescribed, portrayed as good money, as if that is not earned from crime, but legit, from legit activities. So something earned from crime, portrayed as not earned from crime, will be the offense of money laundering. For example, a person does smuggling or drug peddling or ransom or whatever similar to that. But when he files his return, or maybe somewhere else, he declares that income as income from trading of the legit goods, allowed goods, non-prohibitory items, non-contraband. So something which is prohibited, something which is illegal, some earnings are done from there, and but shown as income from legit activities is the offense of money laundering. So three things I have mentioned which must happen. A, there must be, first of all, a crime. There should be earning of money. Then there should be, from this money, there should be, the money earned should be shown as money from legit activities. Only then there will be offense of money laundering. Now, what is proceeds of crime? Though anything which is earned from doing of criminal activities will be proceeds of crime. And crime means a scheduled offense, which we will understand little later. Now, there may be other questions attached to that. I think you must be raising it little later. So I will stop right now at this stage only. Yes.
Thank you so much, Ashwani sir, for enlightening us and sharing us with a deep nuance, what the nuance of proceeds of crime is in terms of the PMLA Act. Now, the follow-up question that comes to my mind is, when we read the PMLA Act, there is a schedule. As you rightly said, there has to be a scheduled offense. But at the same time, the Money Laundering Act in itself is also called a piggybacking law. So my next question is to Khemka sir, as to why the PMLA Act is called a piggybacking law, and what are the different stages which is involved in the offense of money laundering. Over to you, Khemka sir.
Thank you, Govind. Thank you, IMC. Thank you, CTC. Thank you, Bombay Chartered Accountant Society, for having us here today evening. I have just put the definition of money laundering on a screen. Now, you will see I have put proceeds of crime in yellow. So when I'll just, for the benefit of everybody, I'll read the definition. Whosoever directly or indirectly attempts to indulge or knowingly assists or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime, including its concealment, possession, acquisition, or use, and projecting or claiming it as untainted money, shall be guilty of offense of money laundering. So, what is the center point of this offense? There should, it presupposes existence of proceeds of crime. Any person can only commit money laundering when there are proceeds of crime available. Then only the question of his concealment, possession, acquisition, or projecting it or claiming it to be untainted money, untainted will arise. And what is proceeds of crime? As Ashwani ji explained, proceeds of crime is something which is generated from an offense. And which offense? It is not every offense. Only those offenses which are contained in the schedule to this act. So you have three stages. You have a law which depends upon the commission of another offense. So the offense of money laundering itself is dependent upon the commission of another offense. Unless another scheduled offense, one of the scheduled offense has been committed and proceeds of crime have been generated by commission of that offense, there cannot be any opportunity to commit money laundering. So it comes second to commission of a scheduled offense. So first a scheduled offense is committed, proceeds are generated, and then only one can project them as untainted property or conceal it or use it or possess it. So that is why we call it a piggybacking law, because it piggybacks another offense. That in common parlance, we just talk like that. And these are the three stages of commission of this offense. Number one, the commission of one of the scheduled offenses, generation of proceeds of crime, and thereafter the money laundering, which is concealment, possession, acquisition, or projecting, the same as untainted money or untainted property. So that is why we call it a piggybacking law, and that is how I think it should be clear to everybody that it is the first stage is commission of and scheduled offense. Second stage is the generation of proceeds of crime, and it can only be the third stage, that is the money laundering. Thank you, Govind.
Thank you, Khemka sir. Thank you for explaining the stages involved for the money laundering offense to take into place. Now, from a taxation perspective, I come to Ashwani sir. Sir, we all know tax paid money is clean money. So in this context, whether tax evasion and converting black money into white money can also be called as money laundering, sir?
Look, as I mentioned earlier also, that they are not synonymous, because every legislation has its own specific domain and jurisdiction, and so are having income tax law and the Prevention of Money Laundering Act 2002. So tax evasion as such has not been mentioned. That Income Tax Act violation has not been mentioned under the list of offenses or the schedule of offenses to PMLA. So ipso facto, tax evasion will not become money laundering. But hold on, there could be certain situations where while doing the evasion of taxes, certain allied offenses are done, incidental offenses are done, which may find mention in the list of the offenses appended to the schedule of PMLA, such as forgery, cheating, conspiracy, and there would be something more also. So in that process, if those offenses are done and proceeds are derived because of commission of those offenses, then a person may be roped in. But so far, I have noted that both the legislations or both the enforcement agencies, that is Income Tax Department and Enforcement Directorate, they are respecting the jurisdiction of each other. So tax evasion has been kept separate so far as the present conditions are concerned. But all tax evaders, I would give a word of caution that be careful now, because the times have come when there is a multiple simultaneous application of different laws, which to an apparently looking violation of a single law. But while doing the violation or while doing the offense, how many laws are violated, even the violator may not be able to visualize at that stage. Thank you.
Let me add something, Rishi, to that.
Yes, sir.
Ashwani sir said. Look, let me just give you an example. A fraud takes place in a public sector organization. The people who committed the fraud is, or embezzlement is, one of the scheduled offenses. People who committed that offense, they use the services of a person who is an entry provider, and that person, by using certain companies, certain Benami companies, or his drivers, his employees, his other people, he used those companies and provided those entries, and the money was utilized for purchasing of a property ultimately. Now the question is that this entry provider apparently committed an offense under the Income Tax Act. He would say that I have only done I have only provided the entries, that's it. But look at it, what all he has done. He has committed, of course, the violation of Income Tax Act. At the same time, because these were the proceeds of crime, so he abetted the offense of money laundering in converting the proceeds of crime and projecting them as good money, as untainted money. He also abetted that offense. And because he utilized the services of Benami companies, he also committed an offense under the PBPT. And because the company where the fraud had taken place, the people responsible in that company committed fraud. So they committed an offense under 447 of Companies Act as well. So even the SFIO comes in. So, and he has abetted that offense also. So please understand that something may look very innocuous in its looks, but it may have so many other repercussions. Like, for example, it is very common to make surrenders under the Income Tax Act. Now, what happens when you make a surrender? It is easy to pay the tax. It is easy to pay the interest. But then the question comes from where the money came. Whether there was any round tripping. If there was any round tripping, the question of Benami may come in. Whether the source of the money was proceeds of crime or any commission of offense, PMLA may chip in. So these are the situations that something may innocuously look as converting black into white, but it may actually be part of a bigger offense. It may actually be, one person might be committing a bigger offense. So this is how I would just like to add to it. Thank you. You can go ahead.
Thank you, sir. So my next follow-up question is to Khemka sir only. While we're on it, sir, we know that if a person has committed tax evasion, he is liable for prosecution under Section 276C of the Income Tax Act. And whereas Section 276C of the Income Tax Act is not a scheduled offense. So can we visualize a situation where evasion of tax will also inter alia attract the provisions of PMLA? It is for you to Khemka sir.
Thank you, Govind. Thank you, Govind.
Welcome, sir.
It is kind of connected with our last question.
Yes, yes.
See, no doubt 276C per se is not one of the scheduled offenses. But there is a big brother of 276C, and that is Section 51 in Black Money Act. Now, Section 51 of Black Money Act is a scheduled offense. So if the tax evasion is in respect of foreign asset or foreign income, then it is directly covered under the PMLA. It is already a scheduled offense. But even in 276C, how does one evade income? For evasion of income, normally people commit so many other acts. Like, for example, forging the certain bills or forging certain documents, creating false documents. Now, that creation of false documents may be a scheduled offense. So while a person might be thinking that he is only committed an offense of offense under Income Tax Act, he is not liable for PMLA. But while committing an offense, he might be fabricating his account itself. So while doing all this, he might be committing an offense under the IT Act. Okay. So these are the things which have to be kept in mind, and the answer is not very simple. It is not that only because 276C is not part of the scheduled offenses, therefore the tax evasion will not come under the ambit of PMLA. It can, because of the sides it has, like with every dish you have sides, so those sides can be a problem. Thank you.
So while we are already on the schedule offenses of PMLA, talking about some schedule offenses, would you like to elaborate on what other offenses are there in the scheduled offenses to PMLA, which can exactly trigger the PMLA action?
Yeah, the offense list is very exhaustive given in the schedule itself, but it has very large variety of offenses, starting with the IPC offenses. It has offenses from under the NDPS Act, under the UAPA Explosive Substances Act. It has offenses under the Arms Act, the Wildlife Act. You'll be surprised to know it has of course has offenses under the Prevention of Corruption Act. It has 447 of Companies Act as one of the scheduled offenses, and it has it is under the smuggling, for example, under the Customs Act, SEBI, the manipulative and deceptive trade practices, insider trading. All those are scheduled offenses under the PMLA. But of course, there are large number of offenses which are not as yet part of that schedule, but nobody stops the government from bringing another amendment and making more offenses as part of that schedule.
Oh, here, before our dear moderators take up another question, I would like to say that the canvas of ED's actions are quite wide. The expanse is too large now. So by the end of the session, you will be able to realize that, that dialogue of Hindi film, that Kanun ke haath bahut lambe hain. So that will be proved when we read yesterday, even BMA, Black Money Act, we were finding certain things about assessment of the legal years. So today when I analyzed it again, and when I read section 211 of BMA, read with section 84 of BMA, we found that whatever we were thinking, how the EU will do, has already been given. Anyways, coming back to that ED's question, as I said, that ED's expanse is quite wide. I will give 2-3 case studies. On the basis of that, you can gauge that even something which was unthinkable has been put legally into the definition of money laundering, and people are really caught in the net of that offense of money laundering, innocuously, unknowingly, or I would say innocently, or whatever manner you will say, mistakenly. So just I will do the share screen. I will show something. This, can you see one slide?
Yes, sir. Yes,
My
sir.
slides are visible? Yes.
Yes.
So these 2 chimpanzees were attached by Enforcement Directorate. As much as you are amused, I was also when I read this news in the newspaper. And you know what was the connect? You know why? What was the reason how it was legally proved, made possible to make attachment of this? That these 2 chimpanzees were received by that person by making violation of Wildlife Protection Act, which is one of the scheduled offenses. And he also forged some certificate. So offense of forgery was also done by him. So since they were received by him on account of doing these three, as a result of these three offenses, they become proceeds of crime. And proceeds of crime is liable to be attached under section 5 of PMLA, which is in itself a, very, very controversial section, the way it is being implemented today, that whatever comes before the ED, that is liable for attachment. So that is how the proceeds of crime were attached. Thankfully, they were handed over to the zoo authorities, and that is how the things happened like that. One other thing which I wanted to mention was that CBI ED actions may now follow IT default probes. Multi-agency scrutiny is possible because 3 agencies are working in tandem to work upon the commonality in the offenses in various transactions. So one other case study which I wanted to put before you was with regard to a distillery unit. I will just show before you how the things are happening. Yes, this is that slide. That this distillery unit was set up way back in 2005, and it was charged with the violation of Water Pollution Act on the ground that its water treatment plant was not functioning properly. So Pollution Control Board filed some complaint and alleged that you have discharged more water into the river and water treatment is not proper. So subsequently repairs were done and water treatment plant was reinstalled also. So everything was hunky-dory, and thereafter no action was taken by PCB, though the complaint was pending and it was not closed. But eventually, after so many years, suddenly in 2013-14, ED comes into action and starts its investigation. And in 2018, it issues its notice, whereas this alleged offense was done in 2007-8. So in 2018, it issues notice for attachment of the factory on the ground that violation of Water Pollution Control Act was done. So I was also surprised at how is that, because ultimately something has to be done with money. So you know what was the reasoning given? That the distillery unit was licensed to release 50,000 KL of water, whereas it released more water into the river, that is 75,000 KL. And because of this 75 KL discharge of water, excess production was done, and this excess production was illegal production. Illegal production resulted into illegal sales. Illegal sales resulted into illegal profit, which was earned by way of money laundering, because of this reason that this was earned from that offense, and therefore this is portrayed not from offense. So this is money laundering. And since it was invested into factory building, therefore factory building is liable for attachment, where 500 workers were working. So notice was issued. Not only notice was issued, then board was also installed for taking possession, but somehow the honorable tribunal was kind enough to grant the status quo. But believe me, Khemka ji is handling that matter. The prosecution complaint has been filed by ED, and it has become difficult for the director of the company to obtain bail. The offense, under the offense of money laundering, not under the offense of water pollution. No, PCB is silent. Under the offense of money laundering, his bail has become a challenging task. Done water pollution violation done around 15 years back. So this is a situation when we talk about what can be covered in money laundering, how large the definition is. Thank you very much.
Thank you so much, Ashwani sir. Now, coming back, since this is an interplay between various economic laws, now coming back to the Benami law, my question is to Ashwani sir. It's a very pertinent question that is of utmost relevance here, more so these days. Under the Benami law as amended in the year 2016, which came into effect on 1st of November 2016, can you sir please explain as to what are the type of transactions that can be treated as Benami and how these transactions are different from the ones that were defined in the old act when compared with the new law which came into force in the year 2016?
Yes.
More so, as the saying goes, for the amendment, it is like an old wine in a new bottle.
Yes.
So would like you to differentiate between the two, sir.
Yes. Very good question, Govind. In fact, as far as old law is concerned, the definition was very plain and simple. Section 2 very plainly said, if in case of a property is transferred to a person, whereas consideration is paid by another person, say if this is transferred to person A, whereas consideration is paid by person B, then it will become Benami, which was an incomplete definition, because in this case, even the bank loan property obtained with the help of a bank loan would have also been treated, or could have also been treated as Benami, which was not the intention of the law. So therefore, the definition has been totally overhauled, revamped, and brought out in most widest and wildest possible manner in the present legislation, that is Amendment Act made in 2016, which now comprises of 4 parts. Again, I would like to explain it with the help of slide for the benefit of the audience, so that I can yes. So there are 4 parts to the definition now. Part A, Part B, Part C, and Part D. So first of all, I will read 2A, which I have already read. Benami property means transaction in which property was transferred to one person for consideration paid or paid by another person. This was in 1988. This is sweet, short, but very dangerous section. So it was no more a sweet and very difficult. So therefore, now it has been made more elaborate. But the way it has been now designed, it has been designed in such a fashion that everything possible which can be possibly Benami on earth has been roped in. So Part A says, where a property is transferred to or is held by a person. I think my slide is open, Govind. 2.9.
Yes, sir. Yes, sir. It is visible, sir.
Where a property is transferred to or is held by a person, and the consideration for such property has been provided or paid by another person, and the property is held for the immediate or future benefit, direct or indirect, of the person who has provided the consideration. So kindly see, there are 2 conditions in Part A which has been given, and both the conditions are joined with the word and. So the meaning thereby, both the conditions have to be simultaneously fulfilled. If only one condition is fulfilled, it will not be Benami. Both the conditions are fulfilled, only then it will be Benami. Number 1. Number 2, kindly see, the first condition says where a property is transferred to, comma, or is held by. Now, many people were asking this question, whether this act is retrospective or not, though this question is pending before Honorable Supreme Court. But even if it is not held to be retrospective, the problem is created by the way this user of the word held is there. Where a property is transferred to, suppose this act is prospective, or it is not being implemented retrospective date, let us presume for a moment, then the problem which is being created here is in this manner, which I will discuss with you, where a property is transferred to. So suppose this act is prospective, then the date of transfer should be post 1/11/2016, meaning thereby whenever the notice is being taken by the officer, so property should be transferred after that date. I mean the date after the coming of this act. Or is held by. So held should be when? I mean at the time when notice is issued. But held since when? That is not given here. So since it is not there, somebody would guess, okay, sir, since 1988. But why 1988? I mean, it could be time immemorial also. So that could not be the intention of the law, but the law is what it is. We have to read firstly it as it is. So therefore, some kind of clarity is required, or the courts have to read it in proper fashion. Otherwise, any property held even since immemorial time will be potentially covered here. But for that, as a devil's advocate, there is a counter justification from the other side also, that yes, it has been intentionally kept it like that, because as Mr. Arun Jaitley said on the floor of the House, that we do not want to grant immunity to the people who have done Benami transactions. So in other words, what government is trying to say through this legislation, that if you are holding the property, you should have offered it, I mean, or regularized it through the window which was given by Finance Act 2016. It's section 190 of section 2016. Since you're not done, we cannot allow you to continue to hold the Benami property. In other words, what government is saying, that what the legislation is saying, that those cases where the property is held Benami post 2016, this puts an embargo, this law. But it does not mean the earlier properties will continue to be held like that. No, if it is Benami, now it will be covered under the present legislation. That is one of the strong contentions which is coming forth from the enforcement agencies. Anyways, I will read it further as far as the definition part is concerned. So where a property is transferred to or is held by a person and consideration for such property has been paid or provided by another person. So in other words, say seller S transfers the property to, say, Mr. B, and consideration is paid by Mr. R through Mr. B or directly to S. So this is fulfillment of one condition. Other condition is that B is holding this property for the benefit of Mr. R, which is there the second condition. So if those two conditions are fulfilled, it will become Benami. For example, just to explain with the help of a small example, suppose I call my driver and tell him, okay, Mr. Driver, look, this is my car registered in my name. Now you take it, keep in your name and get it registered in your name and enjoy with this car. Now it is your car. Will it be Benami? I have paid the consideration for this. Transferred to my driver D. But in this case, it will not be Benami because condition number B is not yet fulfilled. Second condition. But suppose I call him again and I tell him this time, okay, whenever I need this car, you have to bring for me or my family. You have to keep it for me. Then the second condition is fulfilled. Then it will become Benami. I am trying to understand, I am trying to explain this concept of Benami in a very simple manner, though that there may be complex transactions where it may be difficult to understand. So other parameter which I will suggest, whether a particular transaction falls into part A or not. Also from this angle, whenever there is a duality, then Benami checks in. So duality means when the ownership is divided into two parts. One is a real owner, other is the owner which is shown to be the owner, or DG or owner, or the owner in papers, or the owner who is legally only the owner, not the full-fledged owner. So when the ownership is divided into two parts, Benami checks in. So again, I mean, on another dimension, I mean, this concept has also been borrowed from that Srimad Bhagavad Gita. How, as it has been there, said there very candidly, that a human being starts facing a problem, feeling a problem when duality comes in. Duality means when he finds himself disconnected or different from that supreme energy. When duality checks in, so problem comes in. Here also, when duality comes into the Benami ownership, duality comes into the ownership, Benami comes in. So that is what is about part A. But there are, hold on, there are 4 parts. This is not enough. Other parts are also important. Part B, part C, and part D. Part B says a transaction or arrangement in respect of a property carried out or made in a fictitious name. Meaning thereby, if the property has been kept in a name which is not recognized as a natural person in the eyes of law, it will be Benami. For example, keeping a property in the name of pets, god, goddesses, or any other name which is not recognized as a person, does not exist, is fictitious. Straight away, it becomes a property of the government. Very, very dangerous clause. Clause C is quite sweeping and its sting is not reached, not yet recognized, but it has far-reaching implications. It says a transaction or arrangement in respect of a property where the owner of the property is not aware of or denies knowledge of such ownership. Now you kindly see in many cases, for example, search has taken place and the ladies of the house would innocuously say that, are we shareholders? Oh, no, we are not shareholder anywhere. Are we partners somewhere? No, we do not know. We are not holding any shares. We are not partner anywhere. So any such statement can trigger the effect of section C, clause part C. Now, as a seasoned lawyer, you would say, no, sir, there is a Indian Evidence Act, section 91, 92, 101, 102, 103, which says that the documentary evidence will overtake the oral evidences. So if there are documentary evidences to show that lady of the house is also partner or shareholder, etc., then that should be taken as the fact. But then the burden will be upon you to prove that what is the fact, because you have to take into account the aspects of clause C also. The burden will be immediately shifted. So therefore, now whosoever is owner must carry always the knowledge of that ownership with him or her before making any incorrect illegal statement to avoid getting into trouble. Part D. A transaction or an arrangement in respect of a property where the person providing the consideration is not traceable or fictitious. Now, this has become the most widely used or misused clause by the income tax department. Wherever they were not able to sustain the addition under section 68 or 69, now they are trying their hand under part D. Now, because of its potential of misuser, it says a transaction or arrangement in respect to a property where the person providing the consideration is not traceable or is fictitious. For example, I am holding a property and I say ki, okay, this is my property, but I do not know where from, who has paid the consideration. Sorry, I am not aware about it. So the moment I say, if the person is fictitious or is not traceable, then it becomes Benami property. But suppose I say that the property is mine, I have paid the consideration. Can part D be invoked? In my opinion, no. So part D can be invoked only when I deny about the payment of the consideration, ignorance, or do not give the particulars of evidence. If I say I have paid it, but if I am not able to explain the sources where from I have paid it, can part D be applied? No, because in that case, at the best, section 68 or 69 of Income Tax Act can be applied, not part D, because I am owning the ownership. I am owning the responsibility of its payment of consideration. If I am not able to apply its source, then the different legislation, that is Income Tax Act, should come into play. Whatever can be done under Income Tax Act. Now, suppose I am saying that this has been paid by, say, person B, and person B becomes not traceable, or person B is fictitious, then clause D can be applied. But if person B is duly identifiable, duly identified, whether it can be invoked? No. But the problem is coming with the word traceable. So B should, the person who has paid the consideration, the payer should not only be identified, it should also respond. Otherwise, the agencies may hold that he is not traceable. In this manner, in this case, some kind of clarity is required from the legislation, from the government, or from the judiciary, because ideally the situation here should be that the person should be non-identifiable. Only then clause D should be attracted. But because of the user of the term traceable, it is causing some problem. So this issue we had raised before Honorable Telangana High Court in the case of Zara investment. This is a solitary judgment available as on date in the country, whereby they have said in this case, in this manner, clause D cannot be applied. So these are 4 parts where, I mean, the things are happening in and around Benami in many cases, in certain cases where people have been caught unaware as far as these laws are concerned. Now, before I finish it, I have to also draw your attention to the exceptions to part 29A. So first of all, there are no exceptions to part B, C, and D, mind it. Exceptions are only in case of part A, and that too only 5 exceptions. So if any case falls in part A, but does not fall in part any of these exceptions, then it will be straight away Benami. There are no ifs and buts. So exceptions are only few: property held by Karta, or property in fiduciary capacity, or property held in the name of spouse or in the name of any child. Then last is property held as a joint owner in the name of brother, sister, lineal ascendant, or descendant. So mind it, in clause 4, if you are holding the property in the name of mother and you claim yourself to be the owner, or in the name of father or sister or brother, it will be Benami, unless you are also joint owner. Many people have been caught unaware in this part, thinking that as if it will give a saving. No, it gives saving only when you are joint owner, and there is a reason behind it why this clause has been drafted. Then part 5, it has been brought on record, brought on the statute to give benefit to the power of attorney cases. Suppose I have issued power of attorney to someone else and he becomes owner because of the power of attorney, whether it will become Benami. They are saying yes, it will become Benami unless there are 2-3 conditions which are fulfilled. That power of attorney has been issued, on which stamp duty has been paid, and contract has been registered. Contract of giving power of attorney. Now you tell me in how many cases contract is registered? Hardly any number of cases, because if the contract is registered, then the sale deed will be there. If the stamp duty is also paid thereon, then why to do via power of attorney? So therefore, in power of attorney cases, I mean, there is a huge potential of taking action, because strictly speaking, literally speaking, many power of attorney cases will be covered under part 29A, but will not be able to have the benefit of exception under clause 5. So that's it. I think for the time being.
Yes, thank you, sir. Thank you for clearing our doubts on the definition, the very aspect of Benami law. Now coming to the Black Money Act again, I would request Das sir to please take this question. Sir, we already had Income Tax Act, and now we have Black Money Act. So can you please explain to us what is this black money defined under the Black Money Act? What is the extent of the definition of black money, sir? To you, Das, sir.
Yes. Let me see. See, the Black Money Act, as all of us know, is about undisclosed foreign assets and foreign income. The background, all of us know, all of us are professionals, so I do not want to dwell upon that. It is the Black Money Act specifically addresses the undisclosed foreign income and foreign assets of a resident individual. Chargeability of this thing in section 3 and 4. The definition of undisclosed foreign asset and undisclosed foreign income is provided in section 2. The FAQs have been issued, circular number 13 and 15, which elaborate all those things. So, but there are certain catches on it. It is the way it is black money is defined. The Black Money Act, this chargeability is made. It makes it sounds as if it is a prospective legislation. It is done today, but addresses the misdeeds that has happened decades back. So, in case of yes, is it?
I'm trying to just open it.
Okay.
You can go ahead. I will. In the meantime, I will.
Right. So, in nutshell, chargeability of a Black Money Act is limited on residents and ordinary residents and assessing a default with respect to foreign undisclosed income and assets. The date of entering into force into Black Money Act is July 1, 2015 and covers both undisclosed foreign income and undisclosed foreign asset, both to be taxed at a flat rate of 30%. That is the definition on the screen. And the stringent conditions for non-compliance have been stipulated in the Act. Penalties leviable up to 3 times the amount of a tax, rigorous imprisonment for 3 to 10 years. The assets have to be valued at the present market value. The tax applicable on such, in case you have failed to disclose in your return, another 10 lakhs rupees will you will pay as penalty. And if recovery is not done, double the amount, another similar amount can be charged. So that is that.
So I will add, I mean, just for the sake of clarity,
Yes.
I mean, the
Please.
concept of Black Money Act is very, very simple. That if a person has any asset located outside India, which he has not disclosed or for which he has not been able to give any explanation. Suppose he is asked, okay, explain us about the source of this foreign asset. He is not able to explain it to the satisfaction of the assessing officer.
Yes.
It becomes chargeable to tax in India under Black Money Act, state at the rate of 30%. Similarly, if he is earning any income outside India as a resident, which he has failed to disclose in his income tax return, which he was liable to disclose in income tax return, then that also becomes chargeable to tax under BMA at the rate of 30%. So in other words, as section 4 we will read, which is there on the screen now. So aggregate of two, I mean income from a source located outside India, not disclosed in the return of income furnished, or if no return of income is filed in the case mentioned above at point A, and the value of any undisclosed asset located outside India. So suppose some return was filed, required to be filed, wherein the income should have been shown, you do not file the return. Or if even if you are filing the return, but not showing that income, then that will also become chargeable here. And the next point is value of any undisclosed asset located outside India. So aggregate of these three things, broadly speaking, the entire Black Money Act hinges upon these two things only. Anything with regard to income earned outside India, not on which tax is not paid in India, or any asset which is located outside India and source of which is not explained. Now, not explained has not been defined under the law. So if it is not defined, what meaning it will take, it is anybody's guess. I will read section 211. Any asset located outside India held by the assessee in his name, and he has no explanation about the source of investment in such asset, or the explanation given by him is, in the opinion of the assessing officer, unsatisfactory. So kindly see both situations. Suppose he has said he is not able to explain the source, or even if he is not able to, he explains, but it is not satisfactory. So now satisfactory means what here? How and in what circumstances AO should be lawfully satisfied? So as far as my opinion is concerned, I think he will be satisfied once he finds that there is no evasion of tax. So logically speaking, conversely speaking, if there is evasion of tax involved in acquisition of such asset and it is located outside India, that value of that asset will become chargeable to tax under BMA and the income earned outside India at the rate of 30%, on which penalty at the rate of 90% is also leviable. And for non-disclosure, 10 lakh rupees penalty is there, and prosecution is there, with Khemka sir will explain in detail. I think this is the gist of BMA. Now, before I move further, I wanted to draw attention of the entire panel and the audience here and the entire house here. The definition of the entire controversy under BMA revolves around section 211, which is there before the screen, on the screen before you. Now, kindly see the heading of the section is undisclosed asset located outside India. Now, how it has been defined? Kindly see in the definition, there is not even user of the word and undisclosed. After the meaning of the word, after the word means has been used, there is no word undisclosed used in the entire section. Kindly see, it means, after means, kindly see, an asset located outside India held by assessee in his name or in respect of which he is a beneficial owner, and he has no explanation or explanation is not satisfactory. So the explanation part or the definition part has nothing to do with the nomenclature. So nomenclature is misleading. So they have nothing to do with disclosure or non-disclosure. What the law is concerned with is whether the asset is explainable or not. And how it will be explainable, that has nowhere been given in the act. But the only logical conclusion which we can draw as on date is, subject to further opinion of the house here, that the only logical conclusion we can draw, that what will be the meaning of the explanation here will be that a person who is possessing that asset, owning that asset, is able to satisfy that there is no evasion of income tax act in acquisition of that asset by him or his forefathers from whom he has inherited. We'll come to that question little later. So that is what I wanted to say at this stage. Thank you.
Thank you so much, Ashwani sir and Ash sir. Sir, a question that is emanating to my mind while you very briefly elucidated on the nuances of the Black Money Act in itself. Now, as a professional, what time and again comes to my mind, it's a very pertinent question, is that attachment and prosecutions are two things that are basically a consequential action to the proceedings initiated under the PMLA as well as Benami. However, in the limited scope of attachment only, I would like Ashwani sir to briefly elucidate upon the process of attachment as well as the other consequences emanating thereon. And in addition to it, whether Black Money Act also contain attachment powers or provisions similar to those that we have in PMLA as well as under Benami law. Over to you, Ashwani sir. Thank you.
Thank you, Govind. In fact, this attachment is the biggest thing in these all three legislations, which is creating the ripple effect very fast and instant. It's an instant Maggie. I mean, 2 minutes kind of thing. That under income tax law, the law is no less harsh, but effects is not seen and felt very so fast because of no attachment actions happening over there. Here, the proceedings begin with the attachment. Take Benami or take PMLA. Now, first of all, Benami. Now, under Benami, what happens? That in case the initiating officer finds that so-and-so property is Benami and so-and-so person is Benamidar and so-and-so persons are beneficial owner, then he can initiate the proceeding after recording the reasons and issuance of notice under section 24(1) of PBPT Act 1988 as amended under 2016. So on issuance of notice under section 24(1), giving a show cause notice to the respective persons, that is Benamidar and beneficial owner, that as to why this property should not be treated as Benami and why you should not be held as Benamidar or beneficial owner, as the case may be, he has been given the simultaneous power under subsection 3 of 24, that is 24(3), to make attachment of the property in case he is of the opinion that the property is likely to be alienated. Though the section gives some precaution, some fetters, but in unfettered manner, in mechanical manner, whenever 24(1) is issued, in 99% cases, 24(3) is also issued, which is called as provisional attachment order. So 24(3) he passes an order whereby he makes the attachment of the property. And that attachment continues till the proceedings under section 24(1) are concluded, that is 90 days from the end of the month in which 24(1) is issued. And on expiry of this 90 days period, the IO either releases the property if it is not Benami, otherwise he continues the provisional attachment order under section 24(4) till the passing of the order by the adjudicating authority. And adjudicating authority passes when? Within 1 year from the end of the month in which reference is received by the adjudicating authority under section 24(5). So you can see that broadly speaking, the attachment is continued for around 1.5 years immediately on issuance of 24(1). What is the effect? The attachment does not bring any embargo on the usage or enjoying the fruits of the property. Only embargo it puts is that there is a bar on legal transfer of the property. Property can be enjoyed. If rentals are coming, rentals can be enjoyed. If it is a loan asset, interest can be enjoyed. So if these are shareholders, then voting rights can be exercised. If it is dividend yielding, dividend will be earned and will be earned by the person who is having that, not by anybody else. But embargo is on the transfer. So nothing, no action can be done by way of leading to any kind of compromise in the title of the property. Now under PMLA, section 5 takes care of it. Section 5 of PMLA also gives the similar powers for making attachment. Making attachment of the property derived or involved in proceeds of crime. Now here comes the entire controversy that what is proceeds of crime? What are the properties liable for attachment? There is a little bit of controversy going on whether that very property which is involved in proceeds of crime can be attached or any other property can also be attached. So to my mind, definition of proceeds of crime is very clear. Section 2(1)(u) is very clear. Only that very property which has direct intimation with the proceeds of crime, or which is derived from proceeds of crime, or which is proceeds of crime itself, only that can be attached. Other property equivalent in value can be attached only when the property is taken or held abroad. That has been our understanding for many reasons, many logics, which we can explain if the time permits. We have been arguing it. Honorable Punjab and Haryana High Court in the case of Seema Garg has recently accepted our respectful argument, and Honorable Supreme Court has also approved by way of dismissal of SLP. And Honorable Andhra Pradesh High Court in the judgment of Kumar Pappu, very, very leading judgment, and in Satyam Computers have also taken the same view. But it is seen that in most of the cases, the ED has taken also action of attachment, also in those cases which are not connected with the proceeds of crime, but on equivalent basis, properties of many people have been attached, which is as on date an illegal action, and it does not fit into the scheme of the act also. Under BMA, there are no powers of attachment, but for making recovery, the provisions as recovery provisions of Income Tax Act section 281 onwards, etc., can be invoked, because BMA section 84 connects that for various purposes, various provisions of Income Tax Act can be used. So under, by way of that recovery proceedings, whatever that procedure has been prescribed, attachment will happen, but it will happen only on the raising of demand and happening of default in repayment of demand, etc., etc. To begin with, it cannot be done. Unlike PMLA and PBPT, where the proceedings on the beginning of it, I mean, on the basis of suspicion itself, actions are taken and then attachments are done. That's it. Thank you.
Thank you, Ashwani sir. Thank you for explaining.
Just 2-3 pointers
Yes, sir.
to add to what Ashwani ji said.
Sure, sir.
See, in PMLA, it is an interim, the attachment is an interim proceeding. The attachment under PMLA has two consequences. One, that possession can be taken once it is confirmed by the adjudicating authority, then the possession of the property under PMLA can be taken. And the second is that the property can be confiscated only at the end of the prosecution. When the trial will be completed, then only the trial court will decide, the court which will be dealing with the prosecution will decide whether this property is to be released or this property is to be confiscated. Now, so far as Benami is concerned, PBPT is concerned, attachment is again an interim proceeding, but after the attachment is confirmed, it can be confiscated. So the procedure for confiscation is also given there itself. It is not dependent upon the prosecution. So here the attachment itself can lead, in PBPT, it can lead to confiscation directly, while in PMLA, it is dependent upon the conclusion of the prosecution. So these are the only few minor things I wanted to point out. You can go ahead.
Thank you, Ashwani sir and Khemka sir. Sir, now I would request Das sir to briefly elucidate about the penalty and assessment proceedings under the Black Money Act, sir. Sir, you're on mute, sir.
Under the Black Money Act, the assessing officer, when he receives the information, either from Income Tax Department or from any other authority, under any law, on coming of any information to his notice that there was a foreign asset or income, he shall serve a notice requiring the assessee to produce such information and document as he may require. He can list it. The Black Money Act, however, does not clarify on the aspect of a source of such information and the validity and authenticity of the issuance of notice on that basis. As I have told, Black Money Act does not embody any time limit for issuance of the initial notice for requisitioning information or documents other than when it comes to the notice of the assessing officer. So, it provides a time limit for completion of the assessment and final reassessment and everything, which is 2 years from the end of the financial year in which the first notice was issued. So, Black Money Act also provides for appellate remedial measures like appellate mechanism, like appeal to Commissioner Appeals, Tribunal, High Court, Supreme Court, rectification of mistakes, revision of orders, recovery of arrears, as it contained in Income Tax Act. However, the presumption of existence of culpable mental state shall lead to shift of onus to taxpayer here. It is being questioned in certain cases, but this is what it is. So far, till 31st May 2021, the department has raised a demand of 8465 crores under Black Money Act assessment, penalty of 1,294 crores. It has prosecuted large number of people, and it has on its hand, on its platter, suspected cases of about 11,010 crores out of that international consortium of investigative journalist information. Out of Panama Papers, about 20,000 crores.
I think there is some power disconnect. So I think in the meanwhile, you can take up next question till Desab joins again.
So, my next question is to Amit Khemka, sir. Sir, this is in continuation. I think Dash sir has again, the network is lagging. So it's in continuation to my previous question that I put forth to Ashwani, sir. So now that we know that there is a prosecution and then there is an attachment which is independent in itself, but to some extent they are intertwined as well. Now, sir, we know that prosecution is in addition to attachment and confiscation. Now, my question is, in context to Benami law, whether all Benami transaction in terms of the PPPT Act as amended in the year 2016 will also attract prosecution, more so in view of the provisions of PMLA, or not, or they are separately, or they are completely independent of each other. Over to you, Khemka, sir.
Yeah. Khemka, sir, sorry, before you answer, I will request the organizers to see where there are many questions on the chat box, whether after this question, which is answered by Khemka ji, this question which has been raised, should we continue with the list of the questions which Govindji, etc. has, or we can switch over to the questions which are there in the chat box? Khemka, sir, you can also see and then accordingly decide after answering this question, which you will be answering now. Thank you. Please.
I think our Rutvik and they are shortlisting the questions out of which are to be asked, and then they will forward the questions. Only those questions will take, because some questions are repeated questions or two general questions. So then, depending, we should take another 10 minutes or so, because already we are reaching to around 6:30. So another 10 minutes we could cover Khemka's question plus some floor questions we can consider.
Yes.
Yeah.
So after
we will try to be quick with whatever we have to say now. See,
you can have rapid fire questions, quick fire questions, quick answers.
Correct. Govind, I'll just quickly give you the answer about the criminality in all the three acts. In PMLA, you know that the charging provision, so far as prosecution is concerned, is Section 4. So there is a special court which tries the offense, and if it is tried along with the scheduled offense, the trial of the scheduled offense. So far as Benami is concerned, your question was that under PBPT, whether all Benami transactions are culpable. So my answer is no. Under PBPT now as amended, earlier all Benami transactions were culpable in the unamended act. However, now only those Benami transactions which have been undertaken in order to avoid a law or breach a law, or which have been undertaken to avoid payment of statutory dues, or which have been undertaken in order to avoid any debts. Only in these three conditions the Benami transaction becomes punishable. Coming to Black Money Act, there are broadly three offenses. One is, of course, Section 51, which is evasion to pay tax in respect of undisclosed foreign asset or undisclosed foreign income. However, the most draconian in my view are the are section 449 and 50, where the mere non-disclosure of a foreign asset, not undisclosed foreign asset. It may be a perfectly legally acquired asset, and the mere non-disclosure of the same in the return of income filed under 139 by a resident can attract prosecution, and the punishment is also very stringent. It is up to 7 years of imprisonment. So that is a very, very draconian thing, and which needs to be taken care of by everybody, that just non-disclosure is enough. Even if the asset does not, there is no evasion of tax, even if it is legally acquired, then also it can be prosecuted under the Black Money Act. All the three acts have special courts which are designated under the law. The trials go on there only. So I think that is the shortest I can answer that. You can go ahead now.
I think now we can take up the questions which are being raised by the audience. But one thing, Khemka ji, I wanted to hear, I think because of the need of the time, that many prosecution notices are issued, arrests are done. So what should professionals do? What precautions they should take? How, and I mean, at what stage they should consult the lawyer or do it themselves? I mean, whatever advisory you would like to give, if anything you can give within 2-3 minutes broadly. And then I think we can take up the assorted question from the chat box, or as Rajan sir will guide us, we will go ahead.
And also, sir, specifically in respect of the powers of recording of statements by all these authorities, sir. I think that would be.
Yes, these are the two controversial areas. I mean, the recording of statement and this.
Yes. Yes.
Yes. So I'll begin with how the professionals must deal with these notices. The first thing is that we are not only professionals, we are citizens of the country also. It is our duty to assist every law enforcing agency in their legal endeavor to nail the culprits. So there can be no two views about that. However, in our experience, what we have seen is that sometimes a little negligence, sometimes a casual approach can create a lot of problem for a professional. For example, I'll just give you one example, that if you see the pleadings drafted by a lawyer, he will always start the pleading by saying that this is what I have been instructed for. I am saying so under the instructions of my client. Then in the end, he will write the petitioner through Amit Khemka advocate. So the pleadings have to be drafted in a manner so that you are able to detach yourself from that pleading. So it applies to every act what you do. Every act of a professional in the normal routine should be with the arm's length approach. One should never take it personal. One should never approach it in a personal manner. For example, I'll just give you one example. Today it has become very easy to take few precautions. Like, for example, you have drafted something. Send an email to the client. Write in that email that please verify the correctness of the contents of this document, and then only file it. Once you receive a confirmation from the client, then only you need to file it. If you take it upon yourself, if you have filed something without taking the consent or a specific consent of the client, then in that case, you are exposing yourself. So I feel this is one thing that we have to work with arm's length approach, because the most difficult thing for us is to defend a professional colleague in the court of law. That is the most difficult even for us sentimentally and temperamentally also. But The answer to that is arm's length approach, one. Second is that we have not to be afraid of if a notice comes. Because mind it, that officer can only force you or only ask you only those things which are not within your, which are beyond the professional communication. After all, the law of professional communication, it is available to you. He cannot ask you what advice you gave to him, gave to the client. He cannot ask you that. You are not supposed to answer that. But of course, if you are keeping the originals of your client, that again is a casual approach, that we keep originals of a client in today's world where everything is digital, when everything copies are easily available. So we tend to keep the passwords and keep the other things in our office. We need not do that. Let it be a totally a professional approach. I am very sure if we will have the professional approach, there will be lesser instances of any agency calling a professional. Now, coming to the statement, we have this power of a statement under all the laws, including income tax law. And what is normally told to us is that any statement recorded by these authorities, since it is a judicial proceeding, it is deemed to be judicial proceedings. Therefore, those statements recorded by them are admissible in evidence. Let us always keep in mind that admissibility is different from legal value. The value of the evidence is distinct from admissibility. The statement may be admissible in evidence, but still its value will have to be evaluated ultimately. And the value will depend upon how much question marks can you put on that statement. If that statement was
very important thing.
If that statement was not recorded in a free and fair manner, and if it is a judicial proceedings, I will say even in a transparent manner, if we can put those question marks. Let us take an example that where a person was coerced into giving a statement. Some pressure, some force was exercised. In that case, it is necessary to give a natural retraction. The retraction should not be drafted by us. We may tell the client that, look, it is your right where to write the retraction, where to send your retraction, all that we can advise. But we are not to advise them what retraction they have to write. They have to write what happened there.
Yes.
What coercion was exercised, what force was exercised. So that is how we will be doing our job in an honest manner and in a more effective manner. Because mind it, the client, the way he will write his own pain, that would be even realized by the court which will be examining that retraction one day. The court will also realize that yes, this is the true and fair and honest retraction. As soon as it is a retraction drafted by a professional, by a lawyer, we all know, as soon as it comes in front of you, you know that it has been drafted by an advocate. So it is something like this. What we do is, why should a retraction be typed? How can that person have time to type it out? A person who is in pain, disgust, he can at best today email, or he may send a message, or he may write in his own handwriting. But he cannot have the time to go to a typist and get it typed, get a printout made. No, it is not possible. So these are few things which are to be taken care of, and which has to be understood that these statements are not ultimate. We have to have this approach that admissibility is totally different than the power, then the value of that statement, evidentiary value. Evidentiary value is distinct from admissibility. So we have less time today, so otherwise we could have gone on for more on these issues also. And one more issue, because without that, talking about these issues will not be conclusive. That is the burden of proof. So Ashwani ji, just in very short, just deliberate on the burden of proof in all the three laws.
Yes, without this concept of burden of proof, I think our session will not be complete. Rajan bhai, you would appreciate that. So quickly, I will cover this. In any litigation, the burden of proof is very cardinal principle. Whose burden is what? Whose means whether the enforcement agency or the affected party, whether this burden has been discharged or not, who has to discharge the burden, to what manner this has been discharged or not, and whether the burden is reverse burden or straight burden or what. So situations are different in all the legislations. Now, our constitution is based on this concept that a person is innocent unless proved guilty, and burden to prove that he is guilty is upon the person who is accusing him of guilty. However, this fundamental concept has been compromised somewhere in some of these laws at little bit. Now, under income tax law, we are aware about the burden. I am not deliberate upon. Under Benami law, the Supreme Court has time and again held that the burden is upon the person who is alleging a transaction to be Benami, which is learned initiating officer in the proceedings. Now, PBPT Act, as amended by 2016, has also not switched this concept, has not changed this concept. And this concept has been recognized in a recent judgment from Honorable Tribunal, authored by Honorable Justice Manmohan Singh, which I got an opportunity to argue in the case of Pamela Bhardwaj, wherein the Supreme Court judgment has been connected with the present PBPT law. So burden is upon the IO. Therefore, the proceeding should be held in this manner only. That is the role of the professionals also here. Second, under BMA, of course, the way the sections have been drafted, if undisclosed things are detected, the burden will immediately shift upon the assessee. Because of I have read that peculiarly worded section 211, very peculiarly worded. Under PMLA, there is a concept under section 24 of reverse burden of proof, where there is an attempt to compromise with that constitutional situation which I have submitted before you. But hold on, the compromise is not total. There is no total reversal of burden. As I said, there are three stages under money laundering, that there has to be commission of offense, earning of proceeds of crime, and then portraying the bad money as good money. So the compromise is with the third only. So burden has been reversed under section 24. If we read it carefully, that it is with respect to the third stage only, that in case stage 1 and stage 2 are proved, then the third stage shall be presumed, or the burden will be upon the accused to prove that it is not so, or he is innocent with respect to that. So it is the burden of the prosecution only that he has to prove that there has been commission of offense, and there has to be the burden is upon the prosecution only that proceeds have been earned. Unless the true things are proved, the burden is not compromised. The burden is not reversed. So that's it. I think there are many questions, Khemka sir, which have come up and Des up. I think we must listen to our audience also.
Just one more small thing. In Black Money Act, there is a specific reverse burden of the mental faculty. There is a section which says, as Das sir was mentioning, which says that so far as wherever mental faculty is required, the burden to prove that there was no such intention or will or on the part of the accused, it is on the accused only. So far as that part is concerned, there also we have a little half of reverse burden. It is there in Income Tax Act also when it comes to the prosecutions. Yes. Under the Income Tax also. Under the Income Tax also you have a reverse burden of proof.
Yes.
Although it is again partial to the extent of mental.
With respect to mens rea.
Mens rea.
We don't have much time, but yes, this burden of proof, see, the concept everywhere is no innocent should be this thing, but putting the burden on the accused, even the Parliamentary Select Committee was agitated about it. They made a mention that it is not proper in respect of a PMLA law. in respect of section 23-24. And the government side told that we have provided adequate safeguards under section 8. Where is that?
Yes, that has been.
How government made such a promise and how select committee did not react about it and the way it happened. But it is for all of us to point it out before judiciary when this burden of proof cases come up, that this is what happened during the legislative process. So this has been done, shifting of a burden and placing onerous burden on somebody. Yes, we know that you put a burden, but not make it so onerous and provide safeguards. Whenever you are doing something extraordinary, there some safeguards should be provided. That safeguard is lacking.
Yes,
Thank you.
very right.
Ashwani ji, I agree with you. There are many questions and we would have loved to go on, but already it is 6:45. So what my request is, what we'll do is we'll tabulate all those questions and send it to you. Whatever questions are of general importance, if you could, all of you could give just very brief answers, we'll put it to and send it to everybody, those who are enrolled for this webinar, sir.
Right, sir.
So because otherwise, because a lot of questions, it will take some more time. So,
Rajan sir, what will be done?
Yeah, Khemka ji.
Yes.
Connectivity. Yes, sir.
Yes, that is fair. That is good.
So you want to conclude the session, sir, now?
Yeah, I think we should conclude the session. And so you can make concluding remarks,
Okay.
2 minutes, and then we'll conclude.
Yes. So let us each give concluding remarks, beginning with
Yes,
Dash, sir. 2
Yes,
minutes
sir.
only. 2 minutes.
Yes.
For 2 minutes each. Yes, sir. Dash, sir. And then Khemka, sir, then I will.
I must thank everybody, and it has been good to connect with essentially, though it is pan India, my friends from Bombay. It was very good, nice. Thank you very much. Please, Kate.
Yeah, so बड़े के पाँव में सबका पाँव होता है, तो सर ने थैंक कर दिया है, लेकिन हम भी सबको थैंक यू बोल देते हैं. And it is actually an honor, if I may say so, to be addressing such a august gathering. Having said so, I just one thing which has been left out, and to my mind, which is very relevant. It is the role of the tax professionals so far as these laws are concerned. You know, as we explained, that simple looking tax solutions may actually be leading to some violation of one of these laws.
Yes.
It may look very innocuous that you are making a surrender, for example, or you are making some kind of application for immunity under the Income Tax Act, but you may actually be leading to a bigger problem. So it is necessary for all the tax professionals to have basic idea of these laws. I don't know 1.5 hours was enough for that or not, but we have certainly have tried to trigger that thought in the minds of, even if we have been able to trigger that, then also we'll think we have succeeded. The second is that we have seen that as soon as a prosecution notice comes under BMA or Income Tax Act or under PBPT, the client will come accountant, oh, it's a prosecution notice. What am I to do it? Go to a lawyer, only he will handle the prosecution. Sir, it is not that a lawyer can handle it. These are all matters where a lawyer, of course, a criminal lawyer is required, but with the able association of a tax professional, of a finance professional, you know, because it is your baby, it is the baby of the finance people, and only they can give the solution to the client, only they can show the right path. So it has to be a combo of a lawyer and the tax professionals. And therefore, to my mind, these laws, of course, they are having some very bad impact on the economy of this country because large number of NPAs are being created. However, it opens some kind of a opportunity also for the tax professionals so far as the handling of these laws are concerned. Thank you so much from the bottom of my heart for inviting us and bearing with us for so long.
Ashwani.
So thank
Yes, sir. Sir, I think I will say only three things. Already a lot much have been spoken. That today cost of non-compliance has become this much high than the cost of compliance. We must appreciate and so must be our advisory to the people for whom we are advising. Second, कानून के हाथ वाकई बहुत लंबे हैं. तीनों लॉस को पढ़ लीजिए, चारों और FEMA भी इसमें ऐड कर लीजिए. Really, I mean, this has become the way these have been drafted. These are really very, very fabulously drafted pieces of legislation. I salute to all those who have drafted this. Third, sir, I mean, this is on another dimension I'm adding for my all professional brothers and sisters and all of learned people here, that truly speaking, with the help of these laws, especially Benami law, I am trying to learn the principles of life. I mean, I'm trying to learn that get rid of Benami life and live real life. Whatever is yours, think that only yours. Whatever is not yours, neither think that yours, nor tell others to be yours. Whatever you are inside, be outside the same way. So get rid of Benami life and live real life. Thank you very much to all of you. Thank you very much.
Thank you very much, all of you. Dr. Das, Amit, Khemka ji and Ashwani ji. I think it was an excellent session. And it was, I would say, is an eye-opener. And as rightly said, when we know something about it, it is only curtain raiser. But we should not think that we are understood the laws. When something happens like this, you must go to the expert professional who has studied, who have gone into details about that matter and get a right advice. Because half-baked knowledge is always dangerous. It will put your clients in the joke. Secondly, as Khemka ji rightly said, merely because notice comes, don't ask him to go to the solicitor, go to the lawyer, because if he is only criminal lawyer, he would not know what the income tax complications are or what is the implication background. So it has to be supported jointly by the financial persons who can help the lawyer who is handling criminal matters or prosecution matters to handle it carefully. So this is really a very, very good session and eye-opener. I would say eye-opener. Many of us only read in the page 3, as I was jokingly saying, this is what is happening today, this notice. And as Ashwani ji rightly said, for few black ships, whole country or whole honest people also are getting trapped in the whatever unintended manner. I wouldn't say that was the intention of the legislation or government, but they get trapped in that because of the simple mistakes they make without realizing that they are making a mistake, which could lead to, as Khemka ji rightly said, honestly, somebody who is caught with the and wants to surrender. But by surrendering that, he should not land up in some other complications or other laws. I think that's a very, very good message what he gave. So consult the right people at the right time. I think that's the best way to understand. And if something comes which you are not aware, don't try to project that you know about it, and half-baked reading or half-baked knowledge will be only dangerous knowledge for the client and as well as to you. So with this, I would request Ashok Mehta, our very active member of the Direct Tax Committee of Chamber, to propose a very well deserved word thanks. Just to clarify to members, there was no PPTs, so therefore we cannot share, but the recording version is available, and we are requesting all the panelists to answer the question, so that at least that questions, whatever we could not get covered because of the time constraint, we'll try to answer and send it on email to everybody, whoever is enrolled and whose email IDs are available. So with this, may I request Ashok Mehta to propose a very well-deserved vote of thanks, please.
Yeah. So whatever PPTs I have shown, if that is needed, I will share it with you. You can circulate it, no problem.
Sure. But that is, again, I would basically, the video is a better what they can listen to. I think that is a better way to, but that flow will give a proper version.
Yes, sir.
Thank you, Rajan bhai. I, on behalf of the Chamber of Tax Consultants, Bombay Chartered Accountants Society and the Indian Merchant Chambers, thank Dr. R.N. Das, Amit Khemka ji and Ashwani Taneja ji for their masterly analysis of the three laws, PMLA, PBBT and the BMA, for explaining the complicated laws in a simple and lucid manner. Their advice and explanation and guidance to professionals will help the professionals safeguard himself from hardships of government action. I, on behalf of all the three chambers, thank you all for spending your time over here. Thank you very much.
Thanks to all. Thank you.
Big thank you to everybody.
Thank you very much.
And and I will also thank both the moderators. They have done the excellent job. And also all the people who are working behind the scene, who are not seen on the screen. I thank all of them, because of which their efforts, we could get a good enrollment and we could conduct this seminar successfully.
Yes.
Thank you very much for
Thank you, everyone. Thank you.
Thank you so much.
Thank you.
Thank you.
Yeah.